On December 22, 2025, Adeia, a name you probably don't know, saw its stock soar 18% in a single day. This kind of surge is rare and usually signals something significant. This wasn't luck or rumor, it was the market's reaction to major news. Investors and analysts were taken by surprise. Adeia, a behind-the-scenes tech company, announced a huge licensing deal with Disney. This deal is a game-changer for both companies. That single announcement sent Wall Street scrambling, instantly boosting Adeia's value by millions. The excitement was palpable. When a stock jumps like this, it means investors see a whole new future for the company. They believe in its potential and are willing to bet on its success. Adeia doesn't sell gadgets or deliver packages, but it powers the technology that makes entertainment possible. Its innovations are crucial to the industry. This video will break down why the Disney deal mattered, what it means for Adeia's future, and what you can learn about how business deals move markets. We'll dive deep into the specifics. We'll look at the numbers, the strategy, and the lessons for anyone interested in how money grows. Understanding these elements can give you an edge in the financial world. The Adeia Disney story is a perfect example of how one smart partnership can change everything. It's a testament to the power of strategic alliances. By the end, you'll see why understanding stories like this is key to taking charge of your financial future. Knowledge is power, and in the world of finance, it can be the difference between success and failure. The big news. It's a headline that's making waves across the business world and catching the attention of investors, analysts, and industry insiders alike. Adeia has just signed a major intellectual property licensing agreement with none other than Disney, a name synonymous with global entertainment and innovation. This isn't just another business deal, it's a partnership that could reshape the landscape for both companies. Here's how it works. Adeia's team of inventors and engineers develop cutting-edge technology, secure patents to protect their innovations, and then license these valuable assets to industry giants like Disney. In exchange, Disney pays a fee to use Adeia's technology in its own products and services, ensuring they stay ahead in a fiercely competitive market. Disney's decision to pay for Adeia's technology is a massive endorsement. It's like a world-famous chef choosing a specific brand of ingredients for their signature dish, or a top influencer publicly backing a new product. It signals trust, quality, and a vote of confidence that others can't ignore. This deal sends a clear message to the entire industry. Adeia's technology isn't just useful, it's essential. When a leader like Disney makes a move, competitors and partners take notice, often re-evaluating their own strategies and partnerships. The ripple effect is powerful. If Disney, with its reputation for excellence and innovation, trusts Adeia, it sets off a chain reaction. Other companies, eager not to be left behind, may soon line up to strike their own deals with Adeia, amplifying the impact far beyond this single agreement. And it's not just about the immediate financial gain. This partnership boosts Adeia's credibility, opening doors to future collaborations and making it easier to negotiate with other major players. Reputation, after all, is a currency of its own in the business world. That's why the market reacted so strongly. Investors see this as a stamp of approval from one of the world's biggest and most respected entertainment companies. It's a signal that Adeia's technology is not only valuable, but also trusted at the highest level. For Adeia, this means more than just increased revenue. It translates to greater influence, a stronger negotiating position, and a reputation as a leader in technology innovation. It's a pivotal moment that could define the company's trajectory for years to come. This is how a single, well-timed deal can transform a company's future, unlocking new opportunities, inspiring confidence, and setting the stage for even bigger successes ahead. So, who exactly is Adeia, and why are they suddenly making headlines in the tech world? If you haven't heard of them before, you're not alone. Adeia is a relatively new name, but its roots run deep in the technology industry. Adeia was spun off from Xperi in 2022, becoming an independent company with a very specific mission: to focus exclusively on licensing its vast portfolio of patents. This means Adeia doesn't manufacture gadgets or sell consumer products. Instead, it's all about the ideas, the intellectual property that powers the devices and services we use every day. The company's team of engineers and inventors are constantly developing new technology, especially in the fields of media and semiconductors. Imagine the brains behind the scenes, creating breakthroughs in video processing, smart TV interfaces, and advanced chip designs. These innovations are the building blocks for everything from streaming platforms to next-generation televisions and mobile devices. But here's the twist. Rather than building these products themselves, ADEA licenses its inventions to other companies, often some of the biggest names in tech and entertainment. Every time a company uses ADEA's patented technology, they pay royalties, turning ADEA's ideas into a steady stream of income. This business model is incredibly efficient and profitable. Once a patent is granted, licensing it to additional companies requires minimal extra effort or cost. That means as more companies adopt ADEA's technology, the revenue can scale rapidly, with each new deal adding to the bottom line. Of course, not everyone is a fan. Some critics label ADEA as a patent troll, suggesting it profits from ideas rather than real innovation. But ADEA pushes back, arguing that its research and development drive progress across the industry, enabling new products and experiences for millions of people. The recent Disney deal is a perfect example of how this strategy pays off. By securing licensing agreements with major players, ADEA has proven that its intellectual property is not just valuable, but essential. Wall Street has taken notice, with investors now viewing ADEA's patent portfolio as a potential goldmine. By focusing solely on licensing, ADEA can grow its revenue and profits quickly, without the risks and costs of manufacturing. Each new agreement opens up fresh streams of income, allowing the company to scale in ways traditional tech firms can't. The decision to spin off from Xperi was all about unlocking this hidden value. And with high-profile deals like Disney's, it's clear that the strategy is working. ADEA is carving out a unique and powerful position in the tech ecosystem. As the tech world races forward, ADEA's ideas are now front and center, shaping the future of how we watch, connect, and experience technology. After the Disney deal, ADEA raised its revenue forecast for 2025 by a staggering $60 million. That's like getting a big raise overnight. Investors love this kind of certainty. ADEA now expects $435 million in revenue, up from $380 million. Companies don't raise guidance lightly. This shows real confidence in the Disney deal's impact. Higher revenue forecasts mean more predictable growth and stronger investor trust. The market rewards companies that deliver concrete, positive surprises. For ADEA, this new guidance is a direct result of a signed, sealed, and delivered agreement, not just hope. Investors see this as proof that ADEA's business model works. When a company's outlook improves this much, it's a game changer for its stock. The Disney deal turned ADEA's future from good to great.
Revenue is great, but profit is what really matters. ADEA didn't just raise its revenue forecast, it also boosted its profit outlook by tens of millions. Non-GAAP net income and adjusted EBITDA both jumped, thanks to the high-margin Disney deal. Because ADEA's costs don't rise much with each new license, most of that new revenue becomes profit. This is the beauty of IP licensing: more deals, more profit, without big new expenses. Unlike manufacturers, ADEA can scale up earnings fast. The Disney deal's profits flow straight to the bottom line.
ADEA also raised its operating expense forecast, but that's actually good news. The reason? Higher bonuses for employees, thanks to the company's outperformance.
When a company does well, rewarding employees keeps them motivated and loyal. In tech, retaining top talent is crucial for future growth.
This isn't wasteful spending, it's a sign of a healthy, thriving business.
Investors like to see management and staff sharing in the company's success. Bigger bonuses mean ADEA is hitting and exceeding its targets.
Sometimes, spending more is a sign you're winning. Not everything changed. ADEA kept its debt, tax rate, and share count forecasts steady. This stability reassures investors. The Disney deal didn't require new borrowing or dilution. Steady foundational numbers plus higher revenue and profit is the ideal scenario. It's like getting a raise while your rent stays the same. All the extra money is yours. ADEA's financial discipline means the Disney deal's benefits go straight to shareholders. Investors want growth, but they also want predictability. ADEA delivered both. When big news hits, investors listen to the CFO. ADEA's CFO, Keith A. Jones, summed it up. The significant increase in our revenue guidance is being driven by strong deal execution. Translation? This isn't luck. It's the result of a focused strategy. the management team is delivering on its promises, building trust with investors. The Disney deal isn't a one-off. It's proof that ADEA's approach works and can be repeated. Strong deal execution means more big wins could be coming. For investors, that's the kind of leadership and momentum that inspires confidence. ADEA's future looks brighter than ever.
Even if you don't own ADEA stock, this story matters.
It's a lesson in how value is created. One deal can unlock hidden potential.
ADEA's model is a real-world example of passive income. Do the work once, get paid again and again.
For you, it's a reminder to build assets that generate income, not just rely on a paycheck.
The stock market isn't random. Big moves are driven by real business events. Understanding these stories helps you become a smarter investor.
Knowledge is the foundation of financial freedom.
The deals behind your favorite tech and entertainment shape the world and your wallet.
The more you understand, the better your financial decisions will be.